Hello everyone. You might be watching this video because you feel like you're failing in trading. You may be struggling with trading psychology, such as hope, fear, anxiety, or a lack of discipline. These issues can greatly affect your trading process, causing you to lose money and make unnecessary mistakes. I know that most of us don't even realize the concept of trading psychology until we actually experience it and lose money because of it. I personally didn't understand it either until I lost a significant amount of money. When I started searching for trading materials and learning more about the market, that was the first time I heard about trading psychology. At that moment, I realized that it wasn't just happening to me, it happens to almost everyone. My story started like this. I first discovered the market during a bull run. That's actually very common because this is when most people enter the market. Everywhere you look, people are talking about it. Everyone around you seems to be making money easily. I was the same. I started learning how to create an account and eventually deposited real money to trade. I was afraid that if I didn't buy early, I would miss the opportunity when the price went up. This is what we call FOMO, fear of missing out. At the beginning, my mindset was still cautious, so I traded with a relatively small amount, treating it as a learning process. However, every time I bought, the market went up afterward and I made a profit. So each day I placed trades, and whenever the price increased a little, I closed the position and took profit. Making consistent profits for a few days felt amazing. I became a little arrogant and started thinking, this market isn't that hard. So I decided to deposit a much larger amount of money, almost all of my savings at the time, hoping to make even more profit. Then I continued trading as usual. But this time, when the price went up slightly, instead of taking profit, I decided to wait for it to go even higher. I even closed my computer and went out so I wouldn't feel tempted to close the trade early. However, the price suddenly reversed. At first, I thought, it's okay, it'll come back. But the price kept dropping. At that point, I started feeling nervous and scared. I told myself that if the price just returned to my break-even point, I would close the trade immediately. Sometimes it actually did come back, which made me even more confident. But eventually, the market trend ended and started falling continuously. That was when I truly faced a crisis. I lost more than 80% of my trading account. If this story sounds familiar, it's because many traders have gone through the same stage. This phase is driven by a gambling mindset, relying on luck and emotions. To fix this problem, we must understand the root cause, making decisions based on emotions. When our decisions depend on how happy, sad, hopeful, or fearful we feel at the moment, they become inconsistent. In real workplaces, companies don't just deal with tasks, they also have to deal with human problems. Some employees take days off, some have bad moods that slow down work, and so on. That's why large companies have HR departments to handle these issues. Whenever possible, machines or software replace humans because machines follow clear logic, like if-then rules. Anyone who has studied programming is familiar with this concept. It simply means if a certain condition happens, then a specific action is executed. Machines are consistent and stable. Humans only need to operate and improve them. This is exactly why traders need a trading system or strategy, a clear set of rules. Your system should answer questions like, if these conditions appear, enter a trade. If these conditions appear, exit a trade. How much position size to use? How many wins or losses in a day before stopping? Think of your rule set as a machine, and you are the operator. You can either create your own machine or use someone else's system and adapt it to suit yourself. But two things are important. The machine must produce good results, and you must be able to operate it smoothly. To verify that your machine works, you must backtest and collect statistics. This allows you to objectively see whether it's effective rather than relying on feelings. Then you improve it, test it again, and repeat the process. Over time, you will not only build a better system, but also become skilled in operating it. If you are currently trading without a system, basically gambling, you will almost certainly lose money. Even in my paid course, what I share is essentially the machine that I researched, tested, and operated for a long time, and I also guide students on how to understand it and adapt it so they can operate it themselves. But success still depends on you. Simply enrolling in a course will not magically make you profitable. If you don't have enough money for paid education, you can still build your own system using the free knowledge I share on YouTube. It may take longer because you must test many things yourself, but if you are patient, you will eventually master your own system. There is no way to make money in trading if you don't have an effective system or you don't know how to operate it properly. Relying on signals from others is risky because you don't understand how their system works or whether it suits you. The best solution is to have your own effective system and master it. If you cannot do that yet, you shouldn't quit your current job to trade. Your current profession is also a machine that generates income, and you have mastered it through years of experience. In any field, success comes from having a good system and operating it well. Before entering any trade, never trade just because you think the price will move in a certain direction or because someone else says so. Instead, write down your rules on paper. When you look at a chart, check each rule carefully. Only when all conditions are satisfied should you enter a trade. At that moment, you are not trading emotionally anymore. You are trading like a machine, following a programmed strategy. Your rules must also include risk management. For example, if each trade risks 1 unit but offers a potential reward of 3 units, then even after 3 losses, you can still break even with 1 winning trade. Never trade without clear stop-loss, take-profit, and risk limits. Knowing your maximum risk also helps you stay calm and avoid emotional decisions. Trading is essentially a profession, but many people approach it with the wrong mindset, fall into emotional traps, and end up losing money. Losing money triggers more emotions, which leads to revenge trading, and the cycle continues. The right way is to build your machine and master operating it. Discipline comes from following your system consistently. Without discipline, success is impossible, not only in trading, but in any field. Machines are experts at discipline, and that is why we should learn to think like a machine when we trade.